Hi everyone, I am John Moran and we're talking Florida Emerald Coast real estate. Glad you're here. What happens with Florida's Emerald Coast property matters. And if you're watching this, I'm betting it matters to you. So let's get into it. I'm looking out at the horizon and I'm seeing something that's got me very excited. I think there's an opportunity that's going to hit here in probably September, October. A window is going to open, and those that are ready, willing, and able to take advantage of it are going to get some deals they're not going to see again for a long, long time. Mark McCormick comes out and he says this: in our business, the window of opportunity opens and closes with dazzling rapidity, right? It's fast. And I constantly have to remind people to seize the moment. That was what Mark said. I'm saying the same thing because I believe that towards the end of this year, you're going to see this window of opportunity open. And for anybody who's ready, willing, and able to move, they're going to get an opportunity to buy some properties that they're not at prices they're not going to see again, maybe in their lifetime. Big words, right? What do I mean? Looking at market forces, it appears that we're moving to a period of time where supply is going up. At the same time, mortgage rates are going to come down. Think about that. You're going to have more to choose from at lower prices. That's good if you're a buyer. Let's look at why that is. Well, first of all, the supply is up. And when supply is up, generally speaking, prices come down. So who would be selling right now? There are a certain number of people that held off moving and are now at a point where it's time. Could be their family's growing. They need more space. Could be a job transfer, something like that. Or maybe they got priced out of their house, even though they have a low mortgage rate. Think about that. Back in 2020 to 22, when mortgage rates were so thin, 2%, 3%, these little mortgage rates, people were out buying because they had this huge purchasing power. Did they play it conservative and take that low mortgage rate and buy a relatively inexpensive house? Or do you think they took that low interest rate and bought the most expensive thing they could afford? Yeah, that's what they did. And it's tough. So we're starting to see more owners who are selling because they are getting priced out of their house. They got in at this low mortgage and that was cool, but now the cost to own it has just skyrocketed on them. Think about it. Your home insurance, car insurance, and all the insurance costs, killer. The heating and air conditioning, the maintenance and all that stuff, more killer. And even the cost to live, gas, food, just everything is gut punch after gut punch. And they're finding that these costs combined, even though they have this low mortgage rate, is still, they're not in a position to carry that house anymore. Now here's the good news. They can sell that house and they got a ton of equity. They're going to get out with a ton of money, which is great, but they're going to have to move somewhere that's less expensive, and that sucks. But at least they're going to go with a lot of money. For every loser, there's a winner. I mean, think about it. If you're a buyer coming into this, you're going to have more supply. All these people are coming on the market, so you got more opportunities, more things to look at, to choose from. That's good. You're going to be walking into lower mortgage rates. Ooh, well, that's good too. When prices are starting to drop, you're going to get a lower price to buy at. And wait, there's more. Sellers are more likely to negotiate, to give on price terms and conditions. So that's good if you're a buyer. All right, so let's talk about mortgage rates. We all get it. If mortgage rates come down, buyers are going to have more purchasing ability and they're going to go out and buy homes. What? Two questions. When are mortgage rates going to come down and why are they going to come down? Okay. Well, here, let me answer this. I think they're going to come down in September or October, somewhere around there. I'd say November. We got an election in November, so it's probably going to be before then. So September, October, pretty common. Why are mortgage rates going to come down? Everybody says, they're not coming down, or maybe they'll come down, or why am I so confident? Here's why. Comes down to this: the CPI, Consumer Price Index. This is the inflation measure that the Fed uses. Let's be clear. Jerome Powell, the chairman of the Federal Reserve, came out and said numerous times, he wants the inflation rate, the CPI, to be 2% annual. Right now, it's at 3.48. It was at 8 in 2022. So they've done a good job getting it down, but it's still at 3.48, which is higher than 2%. Public school math, but I still think that's higher than 2. But when the CPI gets down to 2 or close to 2, the Fed's going to start lowering the federal funds rate and mortgage rates will follow. Make sense? Yeah, but so what? Why are rates going to come down? Good question. This is where it gets really cool. They're going to come down because of real estate. It all comes back to real estate. Here's why. Because the CPI number is made up of a lot of real estate, shelter. They call it shelter. That's housing prices and rent prices, all right? Shelter. It's 36% of the CPI, a full third, more than a third of the CPI number is housing, rent, and the price of houses. If the price of houses is high and rent is high, the CPI number is high. That's changing. If housing isn't going up and rents aren't going up, well, then the CPI is going to come down. We get that, right? So what's going on with housing? What's going on with rent? What's going on with housing prices? Okay, here's what's going on. Forbes magazine is reporting that rental growth seems to have slowed since the peak in 2021. Okay, good. Does that mean it's coming down, or what the heck does that mean? The government is so good at this stuff, right? It's still going up, but it's coming down, just slower. Here's what you need to know. Multifamily apartment rents are up 3.6%, same time as last year. So they're still up, but they're only up 3.6%. And the Fed builds in 5.7%. All right. They're guessing that rents are going to go up 5.7, and they build that into their CPI number. Their CPI number's wrong. It's high because rent is only 3.6% and they're allowing 5.7. You're with me on that, right? How about single family home sales? What's going on with those? Are those up? No, those aren't up either. According to the Motley Fool, single family home prices in the United States are at $420,800 in the first quarter of this year. All right, January, February, March. $420,800, and that's down 0.6% from the fourth quarter of last year. So housing prices are down. Rent is running lower than the plugged-in rate the Fed uses. Houses are way under the plugged-in rate that the Fed uses to create their CPI number. Both are causing the CPI to be overstated. What does that mean? Before we get into what it means, let's look at locally, because we care about our local stuff too, right? I think so. Destin condos, take a look. Median sales price for Destin condo is a little bit flat going back to May of last year. It's a trending down line. Okay, that makes sense. That's the board. Not a fall off though, by any stretch. But houses, okay, a little bit the other way, trending a little bit up here in the Destin area. Okay, not a ton, but some. 30A. Look at this weirdness on 30A with the condos. You get this bubble right in last fall. That's kind of interesting. Not sure what's up with that. But you look here, it's trending up ever so slightly, but not a ton. 30A houses, trending down. Okay, trending down. Panama City Beach, condos, trending down. Okay, not off a cliff again, but, down. Houses, flat. I grew up in North Dakota. I know what flat looks like. That's flat. Okay, let's go back to the CPI and why mortgage rates are coming down. It's because of the lag. Real estate, the housing prices and rent prices are measured on a lag, 6 months to 9 months to even a year and longer in some cases. The CPI number that they plug in there, that 5.7, that's an estimate that they use because they don't get the numbers. This is why I think October is when we're going to see the price drop. Let's talk about the lag factor. So here's the way it works. It's a little bit convoluted, but not really. Housing and rent, they're lagging indicators, which means that the numbers that we look at today for housing are really what happened 6 months to 9 months to a year ago, even longer in some cases. What the Fed does is they estimate. When they met last week on May 1st, they plugged in a shelter number in for the CPI. And that number they plugged in was 5.7%. There's no way housing's going to be 5.7%. We just said housing's down and rents are only up, 3.4% or something like that? That's why in October, when the Fed looks at the numbers that are come in, these lagging numbers, they're going to see today's value, but they're not going to see it until October. Little weird, but that's the way it works. So in September, they're going to start seeing these housing numbers that are low right now, and that's going to bring the CPI number down. What? And that's why I say in October, September, October, somewhere around there, the results of all this. And that'll be a lower mortgage rate. Here's a graph by Barry Ritholtz. He puts this stuff out. Alter number is the orange there compared to the blue, especially this year. It's a big thing, all right? And it's on a leg. It's on a leg. It's the way it is, 6 months, 12 months. So 6 to 12 months from now, they're going to see the report of today's numbers of housing and rent. And it's going to be lower. CPI is going to come down. Mortgage rate's going to come down. So what's going to happen this fall? This is going to be interesting. Have you ever been to an event where they keep the doors closed? You can't get in till they open the doors, but everybody wants to get in, and the crowd starts to collect and mill about and starts pushing and shoving, and there's some jostling. And then when the doors open, everybody runs to get to the front or to get to where they're going. That's what's going on right now. All these buyers that haven't bought for, a year and a half, it's not because they don't want to. They're waiting for mortgage rates to come down. They're waiting for the number of listings they can choose from to go up. They're waiting for the sellers to soften on their terms and conditions. They're like outside a Taylor Swift concert, just waiting for the doors to open, and they're all going to run. That's what's going to happen, okay? This is that window I'm talking about. That window is going to open up, and for those of you that are at the front, that are ready, that have got your financing, that know what you're buying, you understand your criteria, you got it, you're ready to go, you're just ready, you're ready, you're going to do very well. You're going to have an opportunity to select from a number of properties at a price you're going to be happy with, at a mortgage rate you're going to be even happier with. How great is that? Here's the problem. It's the closing window theory. Think about this. You ever open those windows back in the day? You squeeze on the side and you lift the thing up and then you let go of the tabs and the window holds. And then when you want to close it, you squeeze those things and you lower them down and hopefully you don't let go, crashes down. Remember those windows? Right? I remember them. Here's a closing window theory. Those buyers that are ready, willing, and able to take advantage and do take advantage are going to get all that. But you know what? They're going to gobble up all those properties from those sellers that are just beleaguered. Just thank goodness you're buying my stuff. I just need to get it sold. They're going to sell off. And when they sell off, who do you think is going to be left? Welcome, right? The seller is going to raise their price because they know the buyers are in. They got purchasing power because these low mortgage rates. And they're going to get really hard. No more negotiating. So, yeah, if you're not in that first wave, it's going to get really hard. You might lose a whole opportunity, a generation of opportunity. So be ready is my point. Be ready. What should you do? Same as always. If you're in for the long haul, sit back and watch the game. It's going to be a lot of fun. There's a lot of cool stuff happening. If you're a short-time player, 5 years or less, maybe even shorter than that, heck. If you're a short-time player, 2 years or less, run, get out, because we don't know. I mean, I think this stuff's going to happen, but we don't know. It might be longer. Get out now. Get out when you know you can get the number you got. If you're a buyer and the numbers work, go buy. If the numbers work, you get the property you want at a price you want and the numbers all work, cool. Who knows? Maybe you can refi once rates come down and a good deal becomes a great deal. That's cool. We like that, right? If you're an investor, play a long game. That's where the safety is. If you're a short timer, it's a little more gambler. We all know that. If you need help with this, info, smartbeachinvestor.com. It's what we do. There you go. That's what's going on right now. Hope this helps you out. I love talking this stuff. Leave me a comment. Follow too. That would help me out a ton. And we'll talk again soon.